Boom! What is up, Waves Capital? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about how the S&P 500, the king of the US equity markets, has just broken below a very significant line of technical support, which I believe is the nail in the coffin for a move down to new 2022 lows on top of this already very bearish macroeconomic backdrop. Okay, so in front of us is TradingView, where we will be doing a technical deep dive on the SPY, or the ETF that tracks the S&P 500. We will, of course, be talking about the significant line of broken support. I want to talk to you guys about why I believe we're definitely going to be going lower than the lows that we saw back in June. And of course, I will talk to you about my downside price targets over the coming month or months, because I want to talk to you guys about how I'm trading this as well, and how us over at Waves Cap have been able to experience gains over the past couple of days on top of this bloody market environment. Okay, so we will be covering that at the end. The reason the technicals are so bearish is because the fundamentals are even more bearish. Okay, so I want to set the fundamental groundwork before diving into the technicals, but we will realistically probably be spending more time on the charts than talking fundamentals. Okay, been talking a lot of fundamentals. We'll have some fun on the charts in this video. So first off, I'll just read through this guy right now, because this was some breaking news that as I was prepping this video came out, sent stock futures cratering. And this really, you guys, on top of Fed intervention, of course, which is the next thing we'll be discussing on a fundamental front, this is a real look into one of the pillars of the US economy, which is Fedex issuing a warning about the reality of just kind of consumer spending. Okay, so let's read through this guy real quick, one-liner, and then we'll move on to the next stuff. All right. So, shares of FedEx plunged 15% in extended trading after the shipments company withdrew its full-year guidance and said it will implement cost-cutting initiatives to contend with soft global shipment volumes as macroeconomic trends significantly worsen. Okay, this is an alarming quote, okay, and that's why it's in quotes. FedEx themselves said this: macroeconomic trends significantly worsen. Okay, the Fed has been in the scopes of investors. This has really been the talk of the town, talk of the street, when it comes to just the very underlying bear scenario, okay, or scenario that a recession is ahead, is because the Fed will do everything in their power, everything in their toolbox to initiate a recession in the USA and destroy consumer demand, which is evidently already beginning to work, because FedEx themselves said macroeconomic trends significantly worsened. Who ships everything you ever order? Obviously not everything you ever order, but one of the largest logistics companies in the US, those who ship goods from businesses to businesses, B2B, B2C, etc., is saying that times are bad and they're cutting costs. That means that the consumer is significantly weakening. People are buying less because things have to be shipped less. Okay, so bad sign right there. I then want to dive into the rest of today's fundamental argument, pretty short and sweet here, by touching on my take on the S&P 500 in this morning's newsletter. I actually kicked this off with technicals, so we'll just skip past that and move on to the fundamentals. Okay, on top of objectively bearish technicals, the fundamentals are, of course, very bearish as well. We just received a hotter than ever inflationary reading, and the Federal Reserve's meetings are coming up next week, which is September 20th and 21st. So stay on your toes, keep an eye out for that. Okay, put that on your calendars. Very, very significant macro event that will inevitably cause for significant volatility in the markets, where they will address how they plan to approach this CPI data. There's little to no chance that these meetings will reflect a positive tone. Okay, so it's very important to understand, you guys. And I was in the camp of the fact that this August CPI data would show inflation cooling down, therefore create for a more dovish tone, which just in Wall Street talk means less offensive tone at the upcoming Fed meeting. That was not the case. I was wrong. Many were wrong. This CPI data, this consumer price index data from August, showed inflation heating, which we covered a lot in the last video. And there's no chance, you guys, that Jerome Powell, after getting slapped in the face like that, is going to come out and give a speech saying, you know what, maybe we'll slow down on hiking rates. No, these guys potentially, I wouldn't be surprised, you guys, if they hike rates by a full percentage point at the upcoming meeting. Okay, to round this up, a hyper aggressive Fed equals a terrible scenario for the markets. Okay, an environment with raising interest rates in a recession. The Fed, through raising interest rates because of the systemic issues of inflation right now, may just cause a recession without even fighting inflation. So this is really kind of a double-edged sword. Whoa, this is really kind of a double-edged sword when it comes to really just cratering the U.S. economy, okay, which sucks, but hey, that's the reality, and us as traders have to do our best to navigate it and trade to the best of our ability, which once again, we will be covering as we dive into the charts as well, okay, how I've managed to make money over the past couple of days, pretty much. Okay, thankfully, I trust that you're well equipped for the downside that I believe is to come. Our put options have absolutely printed cash over the past couple of sessions, and I'm confident that this is only the beginning. The second wave down for the S&P 500, it means some massive waves to the upside for the home team. To include a couple of bearish cherries on top, the SPY is down significantly in after hours. So once again, SPY, at the time I sent out this newsletter, was down 0.74% in after hours. That's an insane move to the downside. And I don't always put a whole lot of weight on after hours trading. Things can change a lot overnight. I've seen it many times. Stock futures in the shitter. We have a green day, right? Or stock futures way up and the markets are bleeding out when upon open. So stock futures taken with a grain of salt, but following this objectively bearish fundamental news from Fedex, it's pretty damn likely, along with the triple witching that we'll be covering next, it's going to be a bloody end of the week, you guys, and probably bloody next couple of weeks. And again, I'll elaborate on that as we dive into the charts. But the final cherry on top, as I just mentioned, is the triple witching. This will inevitably make for a hyper volatile environment, and this volatility is extremely likely to side with the bears. Okay, so triple witching. This is pretty much where options contracts, futures contracts, etc., all expire on the same day, and that day is 9/16. I messed up with this link, so I'm sorry I can't click on this. That was a plan, but whatever, you guys can go Google it for yourself. Investopedia has all the answers. Triple witching, figure it out. Point of just talking about the triple witching in general is the fact that because so many contracts expire on the same day, it creates for excess amounts of volatility, okay? We're already seeing volatility. We're already experiencing a pretty crazy, pretty emotional, pretty manic market environment. So this triple witching will just amplify the volatility that is already existing, okay? And once again, it's likely that, or it's possible that this favors the bulls, but in my perspective, in my opinion, this is 90% likely to favor the bears. And hey, you know what? Good news for us though, right? So it seems extremely likely that we'll be closing out the week with some crimson red fireworks. Better get ready for some steak and sushi or whatever your celebratory foods may be. Okay, so before we dive into the charts, talk to you guys about my downside price targets for the S&P 500. If you want to know exactly how I personally trade on a day-to-day basis, if you want to join Waves Capital for real, if you want to step up your trading and investing game, then check out the first link down in the description box below. It'll take you to this page. You click on my complete portfolio and daily newsletter products. With this, you get a complete breakdown of my entire personal portfolio. All of my call options, my put options way more important in this market environment, okay? If you guys want the answer to how I've been able to make money over the past couple of days, put options, okay? Put options. Just buy some put options. That's shorting stocks. If you watch Big Short, that's how Michael Burry made money, all right? So if you want to save yourself the trouble though, if you want to just know how I'm trading personally, and hey, if you agree with me, maybe you pick up some similar positions. Never advise you to copy me, but learn from my successes, learn from my failures, and implement those into your trading strategy. Regardless, you know how I'm personally trading on a day-to-day basis. I update my portfolio every trading day during market hours and also send out multiple email newsletters every single day, rationalizing my thoughts and letting you guys know why I'm trading the way I'm trading, also including some charts and price targets as well. This right here is a good example of just my price targets newsletter. I did write this for you guys, but every day we cover charts, we cover macro, and yeah, this is what I dedicate my life to doing. So if you sign up, welcome to the winning team in advance. You can select any of these pricing plans you want. Doesn't matter to me. Completely up to you. And of course, you can always unsubscribe at any time as well, but I trust you will be sticking around. So I'll see you in there. Let's move on with the video and close it out talking some price targets, okay? So what is this significant trend line that has been broken? Obviously right here, it's this one. So let's zoom out here and we can kind of get a little bit more macro, okay? Because it's obvious that this trend line right here is in play. June lows, June 17th, the SPY set in low or just above 360. Since then, we have been an uptrend, okay? Uptrend, very, very janky uptrend, but still an uptrend. More importantly, a line of support on said uptrend that has held over the past couple of months since the low on June 17th. Okay, boom, touch point here, actually generous because this is actually the line of resistance. SPY did technically break below it. Little bear trap action right here, managed to rip above it about a week ago. And now this is no longer a bear trap. Now the SPY is well below this line of support. And once again, along with just shit fundamentals, you guys, it's extremely likely that this holds and that the next wave on this macro downtrend has been initiated. Okay, so January 2020, good times, right? SPY hits an all-time high at about 480. Okay, and I will talk to you guys about this as well, okay, this 35% drop, because that's important. I'll save that for the end. Okay, so SPY all-time high, January of 2022. Since then has been in just a series of lower highs and lower lows. High, low, lower high, lower low, lower high, lower low. This did break the trend, but this right here, this can be discounted. I wouldn't even count this, honestly. So lower high, lower low, lower high. I think we're on our way to lower lows. And I do think that at the very, very least, and I talked about this in the last video, but I'll keep talking about it. I think at the very least, the SPY is going to make its way, given this macroeconomic backdrop. Yes, monetary policy is different, but the economy is so significantly worse, is multiples worse than it was back in February of 2020, when the SPY, an all-time high before the COVID pandemic crash, before that black swan crash right here, the all-time high in February of 2020 was 340, okay? So we talk about reversion to the mean a lot here on the channel. I think the SPY, in order to officially revert to the mean prior to reversing course and potentially kicking off a new uptrend for the overall macro cycle to the upside, like a really, really long, decades-long cycle that is ultimately a bull market, because the SPY markets always go up. I think the SPY, at the very least, prior to potentially initiating the bull market once again, needs to revert to the mean. That mean, in my eyes, is the previous high of the overall rally, which takes us down to about 340 from current levels. That is going to be about 12% of the downside. I do have this yellow target right here, because this is my initial target. This was the high we saw back in August, September of 2020. So just over 2 years ago, we saw this high prior to a meaningful correction right here. I do think this will definitely come into play once again. This is just below the June lows that we saw. So this will come into play at about 358, 359. But ultimately, you guys, I think that over the coming month, and I think this is going to happen sooner than later, okay? It takes a long thing for things to climb. But you drop a ball, that ball drops fast, right? Gravity is a lot stronger. Gravity is a lot less forgiving than your legs to climb, okay? Weird little analogy, but you guys get it, okay? So ultimately, I think the S&P 500 will revert to the February 2020 all-time high at $340. But, and I just shared this with the newsletter group, there is a statistic that during recessionary periods since the year 2000, when recessionary indicators are flashing, treasury yields, bonds, the bond markets, etc., which they are right now, the average pullback in the S&P 500 during those times is 35% from the all-time high. So if we take the all-time high up here, take us down 35%, that takes us down to about 310. And it's not all that crazy considering 310 are the levels we were bouncing around during June of 2020, okay? So, do I think 310 is possible? I absolutely do. Do I think that will probably take a few months? I do. But do I think we can see 340, which is once again the February 2020 all-time high prior to the Black Swan sell-off? Do I think we can see that? over the next 30 days? I do. Okay, so that's that, you guys. Once again, in terms of how you make money in a bear market, you short things. Okay, you buy put options contracts on the S&P 500, on the NASDAQ, on whatever stock or asset you think is going to go down, and you buy put options contracts. Okay, easy as that. I have many videos on options contracts. Please go watch those if you want more information on those. But also be aware, because options trading is very risky, and most people, and I had many times throughout my career have lost a lot of money options trading. So proceed with caution. But again, if you want to know how I'm personally trading, then check out the link below, and I'll see you guys on the inside. Let me know in the comments down below as well what you think of the markets right now. Are you bullish for some reason? If there's some crazy reason you're bullish, please let me know, enlighten me. And if you're bearish and you think I forgot any bear arguments that you'd like to contribute to the Waves fam, let me know down below as well. So I'll catch you guys downstairs, and until next time, always remember, take action, make waves. Peace.